Early this week, the global business world woke up to stunning news. China announced it is pulling out of Panama, ending years of deep economic involvement. The decision sent shockwaves through financial markets and left many observers scrambling to understand what went wrong. This event is especially surprising because China and Panama had been strong economic partners for years. The announcement came without much warning. Overnight, Chinese officials confirmed that they would halt all major projects and future plans in Panama. This includes a halt to investments worth billions of dollars. For Panama, a small but strategically important country, this was a major blow. For China, it signaled a major shift in its global strategy. What makes this move even more dramatic is its timing. In recent years, China has steadily increased its presence in Latin America, especially in Panama. The reasons behind the sudden decision are still unclear, but the impact was felt immediately both in Panama and around the world. The world is now watching closely to see what happens next. The stakes are high, and the consequences could reach far beyond Panama's borders. China's interest in Panama was never random. For years, Panama has been a global trade hub thanks to the Panama Canal. This waterway connects the Atlantic and Pacific Oceans, making it a key route for international shipping. China saw an opportunity to invest in Panama's economy and its infrastructure. Over the last decade, Chinese companies poured money into Panama. They invested in ports, logistics centers, and major construction projects. These investments were part of China's larger Belt and Road Initiative, a global plan to build trade links and boost economic influence. By putting money into Panama, China aimed to secure a foothold in one of the world's busiest shipping lanes. Panama welcomed China's investments. The new projects created jobs, improved infrastructure, and helped grow the economy. For many people in Panama, China's involvement was a sign of progress and partnership. But now, with China's sudden exit, all of these benefits are at risk. The pullout raises questions about what will happen to the projects already underway and how Panama will cope with this sudden change. One of the biggest concerns is the $4 billion that China has invested in Panama. This is a huge amount for a small country. The money was spread across several large projects, including new ports, highways, and free trade zones. Many of these projects are only half finished or still in early stages. The risk now is that these investments could be lost. If China pulls out its funding, some projects may simply stop. Construction sites might be abandoned. Thousands of Panamanians who work on these projects could lose their jobs. The government might not have enough money to finish what China started. This $4 billion is not just about money. It represents years of planning and cooperation. Local businesses, workers, and government offices all counted on these projects for future growth. Now, all that is uncertain. For Panama, losing such a big investor is a huge setback. The country will have to find new partners quickly or risk falling behind in global trade. The news of China's pullout spread fast. Stock markets around the world reacted instantly. Shares in companies linked to Panama's economy dropped sharply. Investors worried that other Chinese projects in Latin America could also be at risk. Some even feared that China might pull back from other countries too. In Panama, the local currency lost value. Banks started to worry about unpaid loans for big projects. Insurance companies reviewed their coverage of large construction sites. The uncertainty made it hard for businesses to plan ahead. On Wall Street and in major financial centers, analysts rushed to assess the damage. They warned that this move could slow down trade through the Panama Canal. Shipping companies, exporters, and importers all felt the impact. The effects rippled through industries from agriculture to technology. The shock was not limited to Latin America. European and Asian markets also slipped, showing just how connected the global economy is. Investors are nervous because China's decision is not just about money. It actually sends a signal that big projects can be risky, even when they're backed by powerful countries like China. If China can suddenly leave Panama, well, what's to stop it from leaving other countries, too? This fear has definitely made investors cautious. Another reason for worry is the uncertainty about what happens next. No one really knows if Panama can find new partners to finish the projects. Some investors fear that incomplete projects could become what they call white elephants, expensive and useless structures that just drain resources. There is also concern about global trade. The Panama Canal is a vital link for shipping goods around the world. If problems in Panama slow down the canal or disrupt shipping, the impact could be global. Prices for consumer goods might rise, and shipping times could be delayed. Finally, China's pullout could make other countries rethink their own deals with big foreign investors. This could end up changing the way countries handle international investment in the future. For folks who aren't experts, it's really important to understand why Panama is such a big deal. The Panama Canal is actually one of the busiest trade routes in the entire world. Every single year, thousands of ships pass through, carrying goods from Asia over to the Americas and Europe. Without the canal, shipping would be way slower and honestly, a lot more expensive. Panama's unique location makes it a natural meeting point for global trade, and that's exactly why big countries like China are so interested in investing there. By supporting Panama's economy, they can help keep trade flowing smoothly. But when a major investor like China pulls out, it's not just a problem for Panama. It can slow down trade, raise prices, and create a lot of uncertainty for businesses everywhere. This is why the whole world is paying close attention to what's happening in Panama right now. Understanding these basics really helps make sense of why this story is so huge. It's not just about one country. What happens in Panama can actually affect people all over the world. Experts have been quick to share their thoughts on China's sudden decision. Maria Gomez, who's a Latin American trade analyst, said, "This is the biggest disruption in Central American trade since the canal expansion. Panama relied on China's money to modernize. Now it faces a huge gap." A lot of people agree that Panama is going to need urgent help from new partners. James Lee, an expert in global economics, pointed out, China's move may be about sending a message to other countries. It shows that China can pull back if it feels its interests are threatened. This has really sparked a debate about whether other countries should be more cautious in their own deals with China. Not all experts agree on what exactly caused the pullout. Some blame political tensions, while others say it's more about economic reasons. There's also talk about possible disagreements over how the projects were managed. Still, almost everyone agrees on one thing: the world absolutely needs to watch what happens next. Panama's future, and maybe even the future of global trade, could depend on how this crisis is handled. Right now, Panama is facing a period of real uncertainty. The country has to figure out how to move forward from here. Some leaders are already reaching out to other countries and organizations, hoping to find new investors who can step in where China left off. There's a lot at stake. If Panama can find new partners quickly, it might just be able to save its economy and keep those major projects going. That would help protect jobs, support local businesses, and keep trade moving through the big and so. But the risks are definitely real. If new investments don't come, Panama could face an economic slowdown. Unfinished projects might become a burden, and the country could even lose its place as a leading trade hub. Despite all these challenges, many Panamanians remain hopeful. They believe that Panama's strong position as a trade center will help attract new partners, even if the road ahead isn't easy. China's pullout from Panama is honestly more than just local news. It's a global event with far-reaching consequences. The world is watching, because what happens in Panama could set an example for other countries and big investments everywhere. For Panama, the next few months are going to be absolutely critical. The country has to act fast to protect its economy and its role in world trade. For China, this is a chance to show how it handles big international decisions. For the rest of the world, it's a reminder that the global economy is super connected. Choices made in one country can have big effects everywhere else. Investors, governments, and everyday people will all be watching to see how Panama responds. In the end, China's Panama pullout is really a test of resilience for Panama, for global markets, and for the future of international partnerships. Pause 2s. So, what happens now? As Panama navigates this turning point, experts are already weighing in on the possible outcomes. Some predict a wave of new partnerships as Panama seeks allies to fill the gap left by China. Others warn of short-term turbulence, job losses, slower trade, and uncertainty. But there's also optimism. Panama's strategic location and resilient economy mean it could emerge stronger, more adaptable, and even more attractive to global investors in the long run. For China, this move may signal a shift in its global strategy. Will it focus on building deeper relationships elsewhere, or reconsider its approach to international investments? The answers aren't clear yet, but one thing is certain. The world will be watching every step. Stock footage, aerial shots of Panama Canal, bustling ports, and city skylines, cut to international news headlines and analysts at work. As we look to the future, one lesson stands out. In our interconnected world, adaptability and resilience are key. The story of Panama and China isn't over, it's just entering a new chapter. Stay tuned. Pause twos. As the dust settles, the story of Panama and China echoes far beyond their borders. It's a powerful reminder that every decision on the world stage sends ripples across oceans, industries, and lives. Stock footage, slow-motion shots of ships passing through the canal, close-ups of workers, global trade maps animating with connecting lines. For Panama, this is more than a diplomatic pivot. It's a testament to the nation's ability to adapt, reimagine, and shape its own future. And for the rest of us, it's a call to stay informed, stay agile, and recognize the ways our world is changing. Text overlay. In a world of shifting alliances, resilience creates opportunity. Whatever comes next, one thing is clear. The journey is just beginning. Thank you for watching, and don't forget to subscribe for more stories that shape our world. Satsun. Insunan I pause 100. As Panama and China redraw their diplomatic lines, the world's markets brace for impact. What does this mean for global trade, investment, and supply chains? To answer that, we turn to leading economists and geopolitical analysts. Stock footage, animated graphs showing trade flows, expert interview clips, busy stock exchange floors, container ships rerouting on digital maps. Dr. Elena Ruiz, an international trade expert, notes, China's shift away from Panama could redirect billions in trade, affecting everything from shipping routes to commodity prices. Global supply chains may have to adapt quickly, with ripple effects in Latin America, the US, and beyond. Others predict a period of uncertainty. Investors are watching closely, says financial strategist Mark Lin. Any instability in a key transit hub like Panama can trigger volatility across global markets. What are the possible futures? Some scenarios point to new alliances and trade corridors emerging, while others warn of escalating competition for influence in the region. Either way, the world is watching and preparing. Text overlay. Every shift in the global order creates both risk and opportunity. As the story unfolds, one thing is certain. Panama's next chapter will be written on the world stage, with economic consequences that reach far beyond its borders. As the dust begins to settle, what can the world learn from Panama and China's diplomatic shift? First, nations are reminded of the fragility and interconnectedness of global trade. When one link in the chain is tested, the effects ripple outward, impacting economies far and wide. Second, flexibility is vital. Countries that diversify trade partners and invest in resilient infrastructure are better positioned to weather sudden changes. Policymakers worldwide are now reviewing contingency plans, exploring new trade agreements, and investing in digital logistics to future-proof their economies. Finally, transparency and communication matter more than ever. Open dialogue between nations and clear policy signals can help reduce uncertainty, reassure investors, and maintain stability in global markets. For countries watching from the sidelines, the lesson is clear. Proactive adaptation is key. Whether through policy reform, strategic alliances, or technological innovation, those who anticipate change, rather than simply react, will shape the next chapter of global trade.